Hey, you know, before I forget, can you bring up research on ETFs on here?
Yes, you can. You can screen for an individual ETFs. You can pull up ETF fact sheets, certainly.
Okay.
And let me step through the again the kind of typical workflow of building a analysis. You start by clicking here on New Hypothetical,
Okay.
and you'll notice when you build out a new hypothetical, there's a few different approaches. One, you can type in multiple tickers separated by commas. You can look at our asset list, and this breaks down the investments based on the different um, tiers. So you've got asset classes and indexes, closed-end funds, ETFs, managed models. This is where the ITS models live, right?
Okay.
You've got mutual funds, stocks, underlying insurance products, variable annuity products, and sub-accounts. You could
We
also,
got closed-end funds there too. Okay, good.
yep, certainly, and you've got the ability to screen for investments based on criteria. So, for example, you could say, I want asset type, asset subcategory. Maybe important to me is the inception date and annualized return since inception, and how about, I don't know, 3-year alpha. And I could say I want ETFs that fit this certain subcategory. So maybe I want, large cap and mid cap ETFs with an inception, maybe on or before 01, 2008. Annualized return since inception greater than, I'll just call it 0 and then filter later, and an alpha of less than or equal to 1. And I don't know if there are any that match this given the volatility over the past several years, but in fact there's 58 of them, which is interesting. And you can see you can sort and filter and look at each of these different categories. You could then, say, well, okay, I really happen to like these, and you could add them into this hypo. Or you could say, you know what, I want to take these outside of AdvisoryWorld and kind of look at them in a spreadsheet. That's great too. You just click on export, and you'll see that we pop it into an Excel file for you.
Okay.
Pretty cool. I mean, obviously Excel gives you the ability to do things that you couldn't necessarily do inside of an app unless we spent hundreds of millions of dollars like Microsoft did to build Excel, right? Anyway, so that's one quick approach. You can also import from Excel. That's a cool feature. You can upload a bunch of positions. So if it's something that's not in Orion, or it's something that you might not want to build manually, maybe it's a portfolio of 100 stocks. Well, gone are the days where you have to type those 100 stocks in, manually, or go through a list, here and find those 100 stocks. Well, no, you can import those from Excel if you have them in Excel. Similarly, like I started off here, though, you could type in a bunch of tickers separated by commas, regardless of their funds, stocks, ETFs. Let's see, I must have had a ABNDX. Huh. Which one did I miss there? Oh, I've got a typo there. AGTHX. There we go. So we got a couple funds, a couple stocks, and an ETF. We can add that into our analysis. You'll see everything's updated every single night. And I'll say this is some sample client account. This could just as easily be a sample model that you want to put together separately from ITS model. By nature, hypotheticals were designed to compare individual investments versus one another. Still lives like that. In fact, that's the default. If you want to look at these as a portfolio, you just click right there. You have the option to type in portfolio, by dollar or by share value, or as a percentage of a portfolio. to that end, I could go in and say, well, I want to do this by shares, or you could apply to all and say, I want to do it by shares, or you could do it by dollars, or you could do it by percentage. You know what I mean? So there's just a lot of flexibility here, and given this is many of your first time, or all of your first time looking at this, I'm going to kind of pare it down a little bit and just show you basic workflow with the concept of maybe each of these have 100 grand in them. I can then reinvest dividends and or capital gains. I have the ability to look at performance over any time horizon common to these investments. So I can say, well, here's the earliest common start date. Let's go back that far, or just give me the past 3 years. You can even go in and enter in a custom horizon. So if you want to look at doom and gloom period performance, for example, if you want to look at, I don't know, early 2008 through end of 2009, you could see how bad period performance, how this portfolio performed. With that in mind, you might want to show how some of these ITS models really outperformed other allocations during those bad periods. Really up to you, but you can see here you've got the flexibility to look at any time horizon you'd like. A little bit more advanced than what we like to show on this introduction, but I want to give you guys a kind of a full scope here today. There I selected a different rebalancing rate. On the fee component, by default you have all the different standard front end and back end loads baked. You can see, so you've got the breakpoints associated with these funds. You do have the flexibility though to adjust these, so you could put in wrap fees. You could say, well, I want no fees. A lot of different ways to handle this. Given the intuitive design of our app, if you apply global settings, I clicked on that button here, I could say, well, maybe there's a 25 basis point, I don't know, quarterly wrap fee, and with that I get rid of all these loads. So you see all that, I hit press apply, and it comes right through here. So all those at 25 bips, none, those are deep, so it should be pretty clear. We've had some questions come up in previous calls about fee applications. Do you guys have any specific questions for me about fees right now?
What about fee applications?
I'm sorry?
What was the question again?
Do you have any questions about how to apply fees here, or I know this is your
No,
first?
I think it looks pretty easy. Yep.
Okay, cool. Michael, did you have anything to add to our discussion about fees?
I know we're good over here.
Okay, thank you. So the next step is cash flows. And with the cash flow form, what we're able to do is we're able to look at backwards looking cash flows. So if you want to analyze dollar cost averaging, you can do it right here. If you want to show a plan participant, had they contributed X number of dollars to a 401k, for example, with some type of a sponsor match, how that would have done historically. Or if you want to just look at traditional kind of retirement income analysis looking backwards, you could do that here. But that's again a little bit more advanced to look at these features. But nonetheless, the last step here is where we get to reports. And the first report out of the gate is kind of a traditional hypothetical report. If I click on that and choose parameters, you can see I can add the S&Ps, a comparison. I can do a lot of different things here, but real quick, if I hit build report, you'll see that we get this really nice hypothetical analysis that will show us the back-tested performance of this allocation. Going back in this case, I think it was the common start date was January 20th. Yep, January 22nd, 93. So there's how it performed on an annualized basis, 9.7%. You could see all the different beginning values, the year-over-year performance, so on and so forth. This is just one of many reports that we offer. In fact, I'm going to just use that as a segue to show you our holding scan report. A little bit more drill down analysis here. Actually, a lot more drill down analysis. First off, the holding scan report, you could say, well, I want to compare to my growth plan, and you can blend your own benchmarks, which is a really cool feature here. So this growth plan I created last week, I think it was, 30% Barclays Ag, 70% S&P. You can name it. You can create as many as you'd like. We even put in here for you a best fit benchmark that you can use. Or you could say, you know what, I'm just going to compare it to the S&P 500. Really up to you, whatever you want to do there.
Is the idea, though, to compare it to ITS?
Good point. So there's a couple different things. One, yes, you can compare it to ITS. In this case, we're just looking at one account on its own, though. But I will show you the instance of comparing it to ITS here in a minute. Here you can see the back-tested macro allocation. I'm sorry, the macro allocation of this portfolio. The assets today, how they, the type of weightings that they have to equities, fixed income, convertibles, cash, and other. And that is doing drill down analysis to say these mutual funds and these ETFs hold these types of assets underneath. You can see the asset allocation breakdown here. The back-tested trailing performance versus the S&P. You'll also notice the on the right side here, the risk versus return matrix compared to the S&P in this instance. So it's got a little bit higher return, a little bit less volatility, positive alpha, beta, R squared. Continuing down, you can see the equity properties, such as average market cap, PE and PB give me growth versus value tilt. I get coupon and duration breakdowns, which gives some insight as to interest rate exposure. Here I have my average expense, average turnover.
That. Can you scroll down a little bit more?
Maybe can you still not see?
Okay, there we go. Yeah, thanks.
Okay, so average market cap, PE and PB, interest rate sensitivity and exposure, expense ratios, country and sector breakdowns. Continuing down, you'll notice that we've got an IBM position, and this ETF and this fund both hold IBM. So we do this type of drill down analysis. And when you're building reports, I mean, you don't have to just build one at a time. You can select multiple reports. Getting back to comparing to ITS, here we have this one kind of current account. As a comparison in this instance, I'm going to compare it against maybe this ITS model. And this could be proposed or target. I can also include benchmark performance, so I could show the growth blend or the S&P 500 again. Now, really important to note here is everything that we've done to date in this application and all the analytics that we've shown you is using hypothetical performance. But we've worked with ITS to capture the actual performance of their strategies, and we bake those into this application. So what you can do is you can toggle between using hypothetical performance and actual model performance. And the way that you do that is you click here on Select Edit Performance Settings. And the default is hypothetical, but you could go over to Model. And then you just need to go over and select which model that you want to use a performance for. In this case, we use the PAA.
Now, Mike, when you're showing that toggle, I just want it to be clear. When it's on hypothetical and they're selected on one of our models, it's just going to take our current allocations and back test them and provide hypothetical performance, correct?
That is correct.
But if they choose model performance, that's key, guys, is that you'll actually get our published numbers through the application, net of fees, I didn't mention at the beginning, but right now we have our composite numbers for each of our models in here back to January of 2009 on a monthly basis. And you know, you guys may or may not know, but we're in the process of working on getting GIPS compliance for our numbers. And when we do, we'll actually have monthly numbers, composite numbers going all the way back to the inception of each of our models. So when we're talking about actual performance, it's actually what we got for those periods of time based upon, you know, our actual client results.
When are you going to have those, Mike? Go back beyond 2009?
Well, right now you'll have them from, you know, this day forward from January 2009 until now on a monthly basis. Well, actually through the end of June, and then at the end of this month we'll have them, you know, sometime in October updated, where you'll have them, you know, through the end of September for the third quarter. So those are monthly composite numbers, you know, are same as our published numbers that you would see in our performance illustration. However, it only goes back to January 2009. That's as far as we could take those composites back on a monthly basis right now. We're in the process of, we're getting a lot closer to it. We're in the final stages here, or entering the final stages, I should say, of, you know, GIPS compliance for our numbers. And when we get that rubber stamp of approval, we'll be working with Mike Wilson again to get our track records completely updated and revised to GIPS numbers. And when we do, we'll have the composites going all the way back to the inception of each of our models. So for now, you've got 3.5 years. You know, and shortly you'll have even more. Well, I say shortly, but I expect it's going to be in the next few months. But of course, you know, no promises as far as the timeline on that.
Okay.
But we do expect it to be, you know, sometime between the end of this year and probably the first quarter of next year.
Okay.
Great. So
I think the main thing was we wanted to be, you know, get this app in your hands, let you start using it, and you know, figuring that you could use it with the 2009 to present track record for now, and then when we get the numbers, the full GIPS numbers and the history in there, you know, you'd be off and running at that point in time. So.
Okay.
great, thank you. So you'll notice here that we've got we're using the model performance for the ITS model. I choose save and hit build report now. This report will be completely comparative, all the way from the diversification analysis to the drill down analysis to the actual performance. It will use the common time horizon of both the model and the other, you know, comparative client account, what have you. And you'll notice here, again, you've got the pie chart comparison showing the current versus the proposed. Continuing down, you have the macro allocation breakdown of the current versus the proposed account. Here's your trailing performance back test, including the best and the worst period performance, current and proposed. Risk versus return, so you notice the strategic model's got quite a bit less volatility than does the current account. And of course, all the different metrics that we looked at before, including, you know, market cap, PE and PB, all the different interest rate exposure, expense comparisons, country and sector breakdown, overlap analysis. So again, you get a real good view as to comparisons and a quantitative proposal right here. Some things I wanted to show you guys that are one thing in particular that is a little bit more advanced, but really cool. It's the ability to make a model of models of sorts. And you do that by clicking on New Hypothetical. And you'll notice I'll click Combine here. So I press combine, and then I can make a model of models consisting, I don't know, of these two models, the income and the strategic. I press next, and it asks me how I like to weight them. So by default that would be 50-50, but here I'm going to go ahead and say that I want, maybe 30-70. And you can see all the different investments are placed into the analysis. On the next step, you'll notice that all of the different percentage allocations are set up correctly. And we can again look at these hypothetically with different rebalancing rates, but as mentioned now a few times, we do have the flexibility to use actual performance, even for these quote-unquote model of models. And that's where you can come in here and say, okay, maybe you want to build a holding scan report for this one, and I can choose a growth blend or S&P. We've gone through this now a few times. But more importantly, I want to edit performance settings. I could use hypothetical performance. I could show model performance. Here I've got that one already listed in here, the strategic, but I'm going to go back and add in the income. And this is 70%. This is 30%. I could even show them side by side, hypothetical and model, if I'd like to, but here I'll just do the model performance. Now compared to the S&P 500, here's how this 70-30 blend lined up. And here you can see the two portfolios. I mean, the macro allocation. This is the model of models again. The asset allocation of that model of models. In this instance, it doesn't look like the S&P is the best comparison because it's got so much more volatility. But either way, you'll notice the performance comparison side by side. From a best and worst case analysis, it's quite clear that the worst period, the best and worst period analysis is there for you. You've got your equity and fixed income properties. Again, all the different drill down analysis. You see how quick it is to go back and say, well, I want to compare this rather than versus the S&P 500. Maybe you want to compare it against, this best fit benchmark or versus, some other blended benchmark. And it's so quick to hit build report and reload that analytic. You can see how they line up a little bit differently here. So that's a real quick review of model of models. And what the last thing I'd like to cover, I'm going to do a little bit of jump between the application and an instructional PDF that we put together. And it's something that Michael mentioned when we first jumped on the call, and that's the ability to import from Orion. So basically, to do that, you start here by clicking on Import. And I would suggest when you get some time this afternoon or what have you, when you log into the application, just try it, click on Import, and you'll notice that a screen like this will jump up. So you press Import, and you'll get a whole list of the households in your Orion Advisor setup. and you can choose whichever households that you'd like. So you just check off whatever ones you want to import, and then press OK. And then from that point, you choose the clients that you'd like to import. So you'll just check off whatever clients belong in those households and press Next. And then last step is you choose whatever accounts you want to import, any or all of them, and press Import, and you'll see it'll say Import Successful, and then you'll notice that the analytical illustrations list will be loaded. So again, it's really easy. I mean, all you do is you start off by clicking Import, and then you choose the households and press OK, and then you choose the clients and press Next, and then the accounts and press Import, and you should be good to go. So I know I showed you a lot in about 30 minutes, and we went over a lot of things, but my strongest suggestion would be to get in here, run some imports, run some comparative analytics, use the PDF files that we put together. This training session today, I have recorded it, so you'll be able to access it down the road if you'd like. But lean on us for support if you run into a case where you say, okay, I'm trying to get this specific client case out, or I've got a prospect in my office, or come in my office tomorrow and I need to get this proposal put together. Help us, help you. We're here to handle support. I'm going to go ahead and just really easily put on screen here my phone number, and you can reach out to me if you can't get a hold of me. Just that basic phone number, 818-999-0015. You can ask for support. They'll help you out, but I want to make sure that you all know that all hands are on deck here to help you out, to help out ITS Asset Management. My email address is mwilson@advisoryworld.com. Similarly, you can email support@advisoryworld.com with any questions. I know Michael Schofield has some experience with the application. He might be able to help you with some business cases, but not to beat a dead horse. We are here to support this application, make sure that you're successful using it, and to help you out as much as possible. With that, are there any specific questions?
No, I thank you. I'm going to play around a little bit.
Excellent.
Yeah, I had a question about the ITS portfolios. How long does it take till after there's a change in the portfolios for that to show up on AdvisoryWorld?
So typically, thus far, we've just really gone live with you guys on this in the past few weeks here, but we updated all the data after the end of June for the second quarter, so we had all of the second quarter allocations in there.
Yeah.
And currently, again, this is all based upon our allocations on the Fidelity Institutional Wealth Services platform. That's the only model that we have in here. The performance is for, the Fidelity Institutional Wealth allocations. So, that was roughly about the third week of July. I think we had that up right around the same time that we published our performance results out on our website. We had the performance and allocations updated here in AdvisoryWorld as well. So,
okay,
I would expect that will be about the same this quarter, which will be about the third week of October.
Okay, that's it for me.
Would you like? Is that doable for you?
Oh yeah.
Okay, good. Any other questions about how to use it or what?
Well, I think we've got to play around a little bit, but it looks fairly simple. So yeah, I'll be using it.
Excellent.
Yeah, that's what I was going to ask. Do you see a lot of purposes and applicability within your practice for this?
Yeah.
To be honest, I'd like it to go back further. I guess '09 is a little You know, you always like to show ITS past 08 where it held up better than the rest of the market. So 09 is,
we agree 100% with you on that. It's a compliance thing as far as where the numbers cut off right now. Like I said, I don't want to give set too many expectations as far as a specific time frame, but next month, we're going to have our GIPS examiner in here, and we've done a lot of work, in the trenches, to be ready for that, and hopefully that will go very smoothly, and it won't be long until you guys have a much longer track record to work with. We had the choice towards the end of August where we were ready to roll this out of either holding off until then, which was contemplated, but we thought it'd be better because of the extensive depth of this application to get it in your hands and let you start working with it. And as soon as we get those other numbers in there, like I said before, you'll already be up to speed with the app, and you can just hit the ground running full steam on with our full track record. But there's a lot of depth with this thing, so we want you guys to get out there and get some use out of it and get your hands dirty.
and you said earlier, Mike, that this is all FINRA compliant and all that stuff.
Yeah, all the reports, and Mike Wilson, you can speak up on this, but all the reports that Mike ran, he showed that you could run or available, all have been FINRA reviewed. So all those reports are client friendly. As I mentioned in the announcement email that we sent out to you guys when we rolled this out to you, you should always check with your compliance department of your supervisory BD or RIA firm before you use them with your clients, just to make sure they're okay with them. But they are FINRA reviewed.
That's correct. We are not a member of FINRA, obviously, but we have had many of our clients pass them through FINRA. Most recently, LPL has taken them and reviewed them with FINRA and received approval.
Okay. Great. Thanks, guys.
Cool. Well, thank you.
Thank you. We'll follow up with you after we give you a little bit of time to get in there and look around and figure things out. I'll probably do a follow-up with you guys and just make sure that your questions are answered and that you're able to move forward. So we'll be in touch.
All right, I appreciate it.
Thank you very much.
All right. Thank you, Mike.
Thank you. Bye now.